Julia, if the biggest story in economics town, I guess, is Europe, hot on its heels is this perceived slowdown in China. A lot of bears out there think this is it this year. And we saw a PMI number today for August, which seemed to suggest that parts of manufacturing are in contraction. Is this something to worry about?
Well, the bears are certainly starting to have their day. Obviously, there was some loosening earlier in the year with interest rate cuts, and I mean, people had hoped that that would start to come through in the second half and that we might start to see a bit of a rebound. So in many ways, the contraction of PMI, this is the official PMI, so for the bigger manufacturers showing a contraction, it's a big deal, and it kind of helps to support the bear theory that China is still slowing.
And of course, manufacturing is only one part of the economy. How are some of the other drivers of demand faring?
Well, obviously investment has been a big driver of the economy in the last couple of years, and that's what they've really been trying to control. Obviously, a lot of investors would love China to kind of throw in some more money to spur the economy along, but China knows that's a bad idea right now. Local governments are really struggling. There's been big land sales lately. So they know that they can't just turn back to investment, infrastructure investment, to spur things along.
And they don't want a bubble occurring in the property market, for example.
Well, exactly. And property now is becoming a kind of more contentious issue because they know that they don't want prices to get out of control, but they know that the economy is slowing, and they're being quite adamant not to loosen too much in that area. And they're sticking to their guns on that, which is annoying many investors.
And going through some of the other drivers of growth, net exports are all right, the numbers in August looked fine. What about on consumption? How strong is that still? Consumption
is not as strong as it was last year, but it's not collapsing, it is ticking along. I mean, you've got the longer term trends, so urbanisation, you've got the development of central and western China, so that's helping consumption to tick along. And because jobs are okay, I mean, still we're not seeing big layoffs despite the cool down in manufacturing, then people still have money to spend, so that trend is still going on.
And you're not expecting any change in monetary policy before a leadership transition in October, is that right?
There might be tweaks here and there. I think there'll still be piecemeal things that will happen in the economy, but I think it will be difficult for them to do anything really big right now with the transition coming up. So I wouldn't expect to see any kind of massive stimulus, even though there may be another interest rate cut. Inflation's under control, so they've got something to do there. But yeah, nothing massive, I wouldn't expect.
And just a final question, the local market, the Shanghai index has fallen quite a long way. Is that significant for locals?
Well, it's sentiment, I think, and because they're not seeing anything big happening in terms of a stimulus, then it hasn't really given them anything to sort of get excited about. There's also been the trust industry, which has been giving them quite big returns, so some of the wealthier people have been investing in that. But yeah, sentiment is low with regards to the Shanghai market right now.
Well, I'm sure eyes are all going to be on China for the rest of the year, so thank you very much, Julia.